Hello everyone, thanks for joining us today and welcome to this educational presentation where today I'm going to show you how to fine-tune your entries regardless of what you trade, what market, and what time frame with our new feature on our new PTS Primo Charts called Steps. I want to start off by showing you this chart here, for example. As we look at this 10-minute chart of the spiders, let's say you're an intraday trader, and in hindsight, it's obvious to see that we have a really strong trend moving here, right? How could we have taken advantage of that? Let's say you got in and got out rather quickly and wanted to get back in. Well, by simply using our new steps feature, you could have been provided with all of these different variables to get in the trade a lot if you like to trade and get in and out quickly. But let's say you're more of a refined type of trader. You would rather take the bottom or the really nice inexpensive picks rather than just buying as it goes higher and higher. Well, as we look at this older chart of Facebook, here's a weekly chart of Facebook going all the way back to 2014. Once you would click on our second feature in steps, you would be, the feature would generate all of these nice bottom fishing type of entry points at the bottom of a sell-off. So this is the beauty of our new feature here called Steps. We really show you and help you how to fine-tune your entries, and it's only provided on our new PTS Primo charting platform. This is our new educational platform that I developed with ProTrader Strategies that I'm extremely excited about and sharing with you today. Now, my name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading for 4 decades now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. A specialist is just someone who made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock or equity, you had to go to the trader who specialized in that. That's what the broker did. So I did that during the crash of '87 and the bull market that followed. So I've been involved in just about every market environment you can think of, straight up, straight down markets. In addition to that, I've traded just about every method, every strategy, every system you can think of. So in my 40 years of experience, I know what works in terms of something being consistent, and I know what doesn't work. So that's all we do with Specialist Trading and ProTrader Strategies. We teach all of our members around the globe in over 110 countries and in virtually every state in the United States, all the things I've accumulated in my 4 decades of trading. So we just want to put the power back in your hands. Today we're going to be discussing a great feature called Steps. We're excited about this because this is one piece of the puzzle. In other words, so many traders have a difficult time with their entry points. A lot of times their strategy or method may be okay. It's just that their entry points are a little, less than be desired. This is where Steps can really come in and help you. So I'm going to show you a lot of examples today in different markets and different time frames and in different directions. But before we begin, as always, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of ways to use Steps, but please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. So once again, we're required to show you this by law. So as you're taking a moment to view our disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. You may want to copy down our handle there. It's at SPCLSTTRADG. That's abbreviation for Specialist Trading, obviously. Every day I post different information, anywhere from little bits of wisdom I've accumulated along the way to actual signals that our strategies have generated. So lots of great free information on a daily basis, so feel free to follow us on Twitter. Okay, so as I stated, we are all about educating you. That's what we do with all of our students around the world and around the United States. We simply want to put the power back in your hands so that you can make your own trading decisions, okay? It's been my experience that the reason why most traders fail, and myself included, I'm saying this from personal experience, when I first started trading some 40 years ago, I had a terrible time. I was doing all the things I had been taught and nothing seemed to be working well. Every once in a while, I'd have a good trade based off support and resistance or volume or fundamental news. But then using the same criteria, I'd give it all back on the next trade. So that's what led me down the road to really find out what works in terms of consistency. So I was lucky enough to have some mentors who taught me these things. And this is now what I do to all our members around the world. So as you can see here, my goal is not to force feed you signals. My goal is not to tell you what the perfect market is, a perfect time frame. I leave that up to you. My goal is simply to teach you how to trade with the specialist edge. This is the same edge that turned my trading around some 40 years ago, and hopefully it will be able to turn your trade around as well. So we are all about educating you, not telling you what the right way is to trade. That's really up to you to decide if you want to trade conservatively, if you'd like to trade aggressively, if you want to get out with 1 or 2 points, if you'd like to go out for 10 or 20 points. It's really up to you. We just teach you all the different variables you can use to apply to your own personal trading. Now, since this is an educational webinar, I do love to take your questions to answer each and every one of them, but if we stop at every slide, we will be here for a good part of your Saturday afternoon, so I don't want to take that much time up. So if you do have any questions, kindly wait till the end of the class today. It'll only run about another 40 or so minutes, so I promise I won't keep you here that long so you can enjoy the rest of your weekend. But let's just hold off. We have a good crowd here today. Let's just hold off to the very end to ask any questions. I will answer the most common and popular one right now, and that is this being recorded? Yes, we record all of our webinars, so if you have to leave early or if you're having technical difficulties, many times if you log off and log back on again, the problem will be resolved. But if you still can't see or hear the screen clearly, we will provide you with a link to this recording once we've concluded, okay? So once again, don't worry about any of this, if you're able to see it, if you have to leave early, we will send you automatically a link to this recording. All right, with that out of the way, let's begin. Now, I'd actually like to start off by asking you a question, all right? Has this ever happened to you? Let's say that you're trading your method, your system, your strategy, whatever it's based off. It really doesn't matter. And you enter a trade too early, okay? So in other words, your method gets you into the trade and nothing happens. Or even worse than that, it goes the opposite direction. Let's say you enter and you go long. The minute you buy it, it goes straight down. And either you get stopped out with a loss or you figure, oh my goodness, this is going to turn into a big loss. I better get out while I, have it at least under control, okay? And then the minute you get out, it goes in your direction. Extremely frustrating, happens to all of us, but has that ever happened to you? In fact, has it happened lately? Or what about this? You enter a trade too late. This is almost even worse because many times your method will give you let's say a buy signal, but you haven't triggered it yet. In other words, the point of entry hasn't been triggered. So you sit there and you wait, you like what you're seeing, it's going higher and higher, and now it's really taken off. By this time, it's too late to get in because this is where you were thinking about exiting the trade had you gotten in. And now it finally issues a trigger a signal, and so it's now time for you to get in. So it's a little bit too late. So you never even actually get into the trade. Or what about this? Let's say you don't know when to get back in. Many traders actually are trading a method that does okay. I mean, there's nothing wrong with it, but you get in and then you get out based on the criteria. And then once you're out with a nice solid little profit, you see it continue to go higher and higher and higher. And you think, why did I get out? I left so much money on the table. You want to get back in, but you don't know how to get back in or where to get back in. Your strategy or method isn't generating any more signals for you. So what do? All right. And then lastly, and probably the most common, you don't have the confidence to pull the trigger. Many methods, will be okay, but then once they suffer a severe drawdown, a lot of traders lose the confidence in whatever they're trading. They're scared to get back in. They don't have the confidence because it's not based off of something that they feel will generate profits. So these are all very common issues that most traders go through, especially beginners. But even if you're a seasoned pro, you will still go through these from time to time, okay? So is there something that can help us get through these scenarios, get through these, these personal issues that happen with all traders? Well, before we actually come up with that answer, we have to define what an entry is, because even though there are multiple scenarios for what can happen, what can go right, what can go wrong, there's really only 2 types of entries. So we have to go to the common denominator and realize and fully grasp the concept that among all the strategies, all the systems, all the methods, there are just 2 types of entries. That's all there is. And here's what they are. There's a continuation entry, all right? Continuation entries are basically once a strong trend is in play. And where a lot of traders who like to trade continuation entries is that they like to get a lot of signals and they don't mind buying higher as long as they are in sync with a nice trend. As you see here, here's a generic uptrend in place, and a continuation entry would simply capitalize and exploit this trend as it goes up. So these types of traders who like continuation entries are not afraid of buying higher and buying higher. They're not afraid of taking a lot of signals. They're the kind of traders who like a lot of action. Okay, so look at your own trading method. Is it based on a continuation type of entry? Now there's the other side of the coin, which is a little bit more conservative. It's a pullback entry. All right, so what exactly is this? Well, just like the continuation entry, we wait for a trend to be established, as we see here in this generic little line here that is signaling an uptrend. But rather than buy as we're going higher, a pullback entry waits for a type of sell-off or a little sell-off or diminishment in price. Now, where most traders would think, well, that's the top, it's time to get out, time to sell. According to the criteria of a pullback method, this is actually just a pause or some type of sell-off before the trend resumes. And once all the requirements are met within this pullback, this is your point of entry, somewhere around here. Because with pullback type of traders, they're looking for a resumption of trend once the pullback has concluded. So with pullback types of trades and entries, you will get more, or I should say, you will get less setups, and you will not be trading as much as a continuation trader. But that's okay. Pullback traders usually like entries that are less expensive. They're not trying to buy high and higher and higher as the trend is going up. They're looking for that inexpensive purchase if it's in an uptrend, or if you're in a downtrend, they're looking for that nice sell on a pullback to the upside where you have a bounce in price, okay? So you'll get less setups, less trades, but it's more conservative. You'll enter it at a less expensive price as well. So you have to decide which type of trader you are. That's half the battle, because if you are a pullback type of trader and your method is issuing strong continuation entries, you're not going to feel comfortable. You're going to sit there and say, like, I can't keep buying higher and higher. I just don't feel right. Even though it's profitable, I'm just gritting my teeth every entry. I'm afraid to pull the trigger. Whereas with a pullback type of entry, if you're a continuation trader who likes a lot of action, who likes to trade a lot, well, you may sit there and wait days, maybe even weeks for a pullback to take place. And you're sitting there saying that I have to do more than just sit back and wait. So there's two different types of entry points. Not one is better than the other. It makes no difference. What matters is that you are in sync with whatever type of entry you are trading. All right? So this is where steps comes into play. It fits those two different categories so you can feel comfortable and know where these high probability entry points are. Now, a lot of people say, well, what do you mean by steps? Are there certain steps I have to take? No, steps just stands for short-term entry points. That's all it means, all right? But now let me just go a little bit further here. Steps is not a strategy. This is where a lot of people have difficulty with it. They think like, okay, Steve, this is great, but like, where do I exit? Where do I place my stop? Where do I apply the money management? It's not a strategy, nor it's not an indicator, but it's two completely different proprietary entry techniques. So we're keeping them in-house because they're based off information that I've basically been studying and using for the past 4 decades and learned on the floor of the exchange. Now, they can be applied to your current trading method, and we really feel strongly that they'll increase your odds for consistency if you just use these entry points instead of your current entry point. Or if you like to tinker under the hood, if you're one of these traders who likes to explore and develop your own trading method, well, you can use them as building blocks for the construction of a new system or a new strategy that you're putting together. So there's many ways to use them. All we know is that, as you'll be able to see in the upcoming examples, they're very high probable points of entry that will really help you. But remember, they are just one piece of the puzzle of a full-fledged strategy. In other words, to have a full-fledged strategy, you need about 4 or 5 pieces of the puzzle. You need stop placement. You need different exit points. You need different money management technique. All these different things come into play. We're just sharing with you one of them, which is extremely important, which are your entries. All right, so let's talk about step 1, all right? Step 1 is an entry point designed for trading strong trending markets, all right? So this step 1 fits in with continuation traders. If you're a continuation trader who likes to trade intraday strong markets or who likes to trade these strong straight up or strong straight down markets, step 1 is for you. Now let me show you some examples here. Let's look at a strong trending market in IBM. This is an older chart coming into the year, but we're using this for educational purposes. As we can see here, we've got a really nice move. We've had a really nice move in IBM. Let's say that your method, your strategy, it makes no difference what it's based off of, gave you some type of entry point roughly around this area right here, around the beginning of the year, okay? Now, you've been trading this strategy for a while. You don't feel that comfortable because it hasn't really been giving you the greatest of entry points, all right? How could we have increased our odds for success? Well, with our new PTS Primo charting platform, which is just makes everything so simple, all you would have to do is click on in the top upper strategy tab right here, steps number 1, because you're a continuation trader. Steps 1 is for continuation traders. And once you click that on, you'll get a drop-down menu. And the first thing you want to do is just simply click on the signal arrows. Once you do that, look what happens. You're going to see, excuse me, I kind of went forward there, all these buy setups, okay, that you can choose and pick from to meet your needs. Now, let me show you the different ways you could apply this, all right? Every time there's a green arrow, you could simply enter on the market close. So let's say we had this arrow right here that we wanted to enter. We could have entered on the close. Now, unfortunately, at this time, you would have had to sit through a couple of good weeks or possibly a month before anything really took place. So you could actually enter it on the next bar open. Many times when you have setups like this, the opening is a little bit lower and you'll get a better entry. But this, in my opinion, is the best way to enter and the most conservative. And that's simply entering 1 tick above the high. So wherever you have a green arrow up here, you draw a line 1 tick above that. And once you trade 1 or 2 ticks above, that's your entry point. So as you see here, even though we had a green arrow, we would not have purchased. We never went above that until right here in January. And that's where you would have entered. And that's where price took off, okay? Now, a lot of people say, boy, Steve, this is great, but what happens when the trend changes? Am I still going to be generating buy signals? No, because the proprietary technique of steps 1 is very fine-tuned to the trend. So as you see here, look what happened at IBM. The trend changed drastically this last spring. Well, the beauty of steps is that it changes as well. And even though you'd possibly taken the last signal here, you wouldn't have bought above these because we never traded above. You would have stopped and reversed if you were so inclined and used the same entry points, either on the close, either on the opening of the next bar, or 1 tick below. Now, we're not telling you how to trade this. In other words, we're not saying you have to buy the stock and short the stock, all right? We realize that not everyone trades that way. But we have multiple members around the world who apply options to this. So if they get a buy setup on their strategy, they'll simply buy long calls or short shorting signal on the market. They'll buy long puts, or you can use some type of spread. It's all up to you. We're not telling you how to apply this. We're just giving you high probability and finely tuned points of entry. Let's look at another example here. Let's look at GWW, all right? Obviously, we have a really strong downtrend in place, but how did we know that, or how did we know in advance how we could have taken advantage of that? Let's say your method, once again, generated some type of a breakdown here. So after this point, once you had a solid close below that breakdown point, you wanted to go short. But you're afraid to pull the trigger. You've had some losses lately, so you want to really, make sure that you're going to get in. Maybe it's not just a fake breakdown and it's going to go back up. Well, once again, you just click on steps 1 and look at all the red arrows that are generated. So this is basically telling you these are finely tuned points of entry to go short. Either you can purchase puts because we realize this is an expensive stock, or if you had an account size big enough and you wanted to, you could have shorted the stock. But either way, you can use the same techniques again. Enter on the market close, or enter on the next bar open, or the more conservative way is enter 1 tick below the low. So you draw a line there, and that's where your entry point would be, and you just take advantage of this. Now, another way to apply steps 1 is to add it to long-term positions. For example, if we look at this weekly chart of the spiders coming into this past week in October, all right? Looking back in hindsight, we say, sure, this is great. We've been going up. And let's say that, your money method or your way of investing actually got you in long right here. And you really think the economy or what's going on in the world, whatever, we're going to make brand new highs and continue going higher for, weeks, months, maybe even years. So you want to get back in. But how do you get back in? Most traders, myself included, when I first started, had a very difficult time getting back into the markets. It wasn't until I was introduced to this technique on the floor that I had the confidence to get back in at all these different places. These are all continuation entry points generated by step 1. So you can pick and choose wherever you'd like. Now we can also apply this to any time frame in any direction. Let's say it's the same scenario but for day traders or intraday traders. Here is a 10-minute chart of the spiders this past week in October. All right. Once again, let's say you had purchased somewhere down here. You had a really nice trade, but you think the market is just going to continue to go higher and higher, so you want to buy more. Well, click on steps 1 and look at all the buy signals that are generated. You can decide for yourself where you'd like to get in. Okay. Now we can also apply this in a downward direction. A lot of people say, well, Steve, I like to, go short as well. Okay, well, here's a 5-minute chart of IBM last week as well. In hindsight, a really strong move to the downside in IBM. How could we have taken advantage of that? Well, click on steps 1. And even if we had used this back here, look at the very first bar here on the 11th of October, could have gotten us short on this 5-minute time frame and had a really nice trade to the downside. Now, steps can also be applied to any market in any time frame. Here is an hourly chart of the E-mini futures. This is going back, once again, starting in the beginning of October, this past couple of weeks. All right, we've had a really strong upward market this last few weeks, and looking back in hindsight, it's easy to see, but how could we have taken advantage of that before we even knew that we were going to be this strong in an upward move? Now, this is an hourly chart of the E-mini futures. All you have to do is click on steps 1, and this is the beauty of continuation trading. They're for traders who aren't afraid to buy higher and continue to buy higher because they want to take advantage of a lot of trades and a lot of setups in a strong trending market. All right, now one of the things we've been asked a lot about lately is trading the Bitcoin. There's a lot of interest in this, even though we have no affiliation with any brokers or anything involved with the Bitcoin. We realize that it's an emerging market and a lot of people are interested in this. Well, here's a weekly chart on our PTS Primo charting platform of the Bitcoin. Okay, now looking back on a weekly time frame, wow, this looks like a straight upward market. How could we have taken advantage of that? Well, on a weekly time frame, it makes no difference what market, what time frame, what direction. You would simply apply steps 1 and look at all the buy signals going back this past 2 years that you could have taken advantage of going long trading the Bitcoin. Okay. In fact, there was just one generated just, I would say, a few weeks ago, right back here at the beginning of October. So this is the beauty of our proprietary tools here. They can be applied to any market, any time frame, in any direction. So steps 1 is for traders who like a lot of signals, for traders who don't mind buying higher and higher and higher as the trend is going up, or selling lower and lower and lower as the trend is going down. But what about the opposite side of the coin? What about the more conservative trader who doesn't need so many signals, who would rather wait for some type of sell-off before they enter, or if they're going short, would rather wait for a nice little bounce to get in at a higher price or to sell at a higher price before it resumes its lower trend? This is where step number 2 comes into play. All right, it's an entry point designed for trading strong pullback markets. All right. Let's look at this example in Tiffany here. Now, someone looking at this would say, well, Steve, boy, this stock has a major run-up. It's kind of gone up a little bit too soon, too quickly, too soon. In fact, the chat room and the trading room I go to says that this is tremendously overbought. All right, all the indicators are overbought. All of the resistance comes into play right here. In fact, the chat room I belong to even says that this stock's probably going to come back and test those lows again because there's no reason why it should have gone up here. All right. None of our methods, none of our strategies are based on those type of things. We don't care about what other people are saying. We don't care about economic news or research or support and resistance. Remember, I only teach and trade things in my personal account that have shown consistency in the past 4 decades. So there's no reason why I would teach my students around the world things that show no consistency. So we don't rely on fundamental news. We don't rely on support and resistance. We don't rely on volume because they're too discretionary. You know, one man's support is another trader's resistance. We just listen to what the market does, and that's what steps 2 does as well. Steps 2 was generating a buy signal here. If you clicked on that, all you had to do was wait for the drop-down menu, click on signal arrows, and you could have seen for yourself that a buy signal was generated, but everyone thought it was topping out. So this is where you have to have faith and listen to the market instead of what conventional wisdom has taught us is supposed to work. Because in reality, the market always knows what it wants to do, and that's the only thing we should be following. And this would have been a very nice trade in Tiffany, purchasing it right at these levels. And you could have used the standard entry points that we talked about before. You could have purchased on the close, you could have purchased on the opening of the next day, or you could have drawn a line above that green arrow and bought once we traded one tick above. Let's look at GPC. All right. Once again, someone could look at this and say, well, Steve, this is right where the Fibonacci support is, and all the institutions love this stock. I think we're going to go back and make new highs. Once again, we don't listen to those outside sources. There is no consistency in them. We only listen to one thing. That's the market. And that's what Steps is based off of, listening to the market. And at this point, the market was telling us that the overall trend is still down. And all this little bounce is not the beginning of a new upward trend. It's actually a pullback. So Steps 2 generated a sell signal, and look what happened, okay? Would have got you in right there at the total high of that little bounce there. Now we can use it for pullback trades. Here's another example in KORS, K-O-R-S. This happened in the summer coming into the end of September in October. Once again, a very strong run-up. It looked like we're rolling over, and look at this huge gap here where most traders would say, boy, you've got to get out of this. We're going to come all the way down and fill this gap. All right, there's basically nothing here. There are no orders because no trades took place. Well, once again, we don't listen to those things. We only listen to what the market wants, and Steps 2 was generating a buy signal, and as you can see, it took a little while to initiate, but ultimately it went higher coming into the end of September, beginning of October. Now here's a downward market in BBBY. All right. Now most people would think, well, perhaps we didn't confirm this new low. While we're going lower, all the oscillators, all the indicators are actually firming up. So this is probably a nice short-term bottom. We should buy this. Maybe it'll come all the way back up to the top. Okay. Nope. Steps 2 is signaling a sell signal because this is just a bounce in an overall downward trend. And look what happened in the stock coming into this last week in October, 15 points to the downside. Now, obviously, the stock, some news or something came out where this large, strong gap to the downside occurred, and then another strong gap occurred just last month. Did we know this in advance? Did we follow the fundamental news or why the stock was going to gap down? Absolutely not. We're just listening to one thing. That's the chart in front of you. When you make your trading simple, when you don't listen to these outside sources, you'll get much more clarity, and you'll be able to be on that road to consistency. Okay, take it from someone who's been there. If it didn't work for me 40 years ago, it's not about to start working now for you as a trader. All right, I used all of these things: support and resistance, fundamental news, earnings. I was in charge of making markets for 50 stocks, so I had to know about all this stuff. It didn't help me at all. My mentors taught me just to listen to what the market wants to do. That's what Steps does internally, and that's made all the difference for me. Now, a lot of people are interested in new company investments, in IPOs, all right? Just about 4 or 5 years ago, the darling of IPOs was Facebook, all right? When this came out, everyone in the world was talking about Facebook, how the stock is going to be opening up and go straight up to be a $100 stock. We all know what happened. If you followed it, it opened up roughly around the 40s and then proceeded to lose half its value, went into the 20s. All right. So how could Steps 2 have helped us? Well, once again, Steps 2 is not designed to pick a bottom or top. Neither is Step 1. It's just designed to fine-tune your entry, to get you in at a better place so that you feel ultimately more comfortable with your trading. So rather than simply buying here at the initial public offering in 2012, we would wait. Now, this is a weekly chart of Facebook. Now, nothing was generated until 2013. In the spring of 2013, a buy signal was generated roughly around 23 or so. All right, so you could have taken that. Remember, we're investing, so we're going to hold on to the position for a while, and nothing really happened. In fact, we went down a little bit lower, about a point lower to the $22 level, but another signal was generated. So you could have doubled up, or you could have at least given the confidence to stay in the trade, because we all know what's happened with Facebook. Now, coming into 2014, the stock took off, tripled or quadrupled its value, but then started to really look as if it was having a difficult time. Not to worry. Many people exited and said, well, this is over. It's probably going to come down and match its lows again, or maybe go to the 30s, and I'll pick up some more stock then. This is the beauty of using Steps 2. Steps 2 actually generated a nice buy pullback right here in 2014. Now, we all know what has happened with Facebook. Going forward in this next chart, we see here that from 2014, here was that last signal, to 2017 to present, Steps 2 had pinpointed every major pullback in the stock. Okay, the last one being just at the end of last year. So don't you see how this can help you? Remember, Steps 2 is designed for fine-tuning your entries for pullbacks, for getting you in at inexpensive price if you want to get long, or having you sell at a higher price if you'd like to get short. Now that's a weekly chart. Let's go back to a daily chart. A lot of traders like to say, well, Steve, you know what? I don't have time for studying the markets. I don't have time for listening to the markets. I kind of go off what my broker says or what somebody says in a chat room or something. Listen, remember, it's not our goal to tell you how to trade. We're simply trying to inform you and teach you what is worth. But if you feel as if you have to listen to others' recommendations, that's okay, but maybe you'll want to use steps to fine-tune your entry. This is what happens with recommendations so many times. As we look at Win here, there was a recommendation to buy this stock, and when everyone hears the same thing, this is what usually happens. The stock will gap up and then quickly fade because there's just too much emotional exuberance. Many times the best thing is to wait for the dust to settle. Click on Steps number 2 tab up here, and you'll see that once you click that on, it will generate where the buy signal is. And you should have actually waited, rather than buy here, waited until the spring, and that's when you had a really nice purchase. Okay, so you see how this can help you. It wasn't saying that this was a bad stock to buy. All it was saying is that your entry was faulty, and what Steps 2 does is fine-tune your entry point. Now that's off a recommendation. How about if we're an intraday trader? Well, looking at this chart here, this is a 15-minute chart of Apple last week. A lot of people would say, well, there's no real direction here in Apple. I trade this on a 15-minute time frame, and we're just kind of in a range. I'm going to wait till something happens. Well, if you wait, many times you'll miss an opportunity. As you can see here, steps can be applied in any time frame, in any market, and in any direction. Now, once you click on Steps 2, you see that a buy signal was generated here on the 13th or 14th, and look what happened the next day. All right. That's a 15-minute chart of Apple. We can look at an entirely different market, a daily chart of the E-mini futures. All right. A lot of people like to use sometimes as a hedge or just try to trade individually the E-mini futures and hold for overnight positions. Well, this happened just about 3 weeks ago in the E-mini futures. As the market had been going up, we started to have 3-4 down days in a row where most people would have thought, well, we're finally rolling over. This is the end of this rally. Steps 2 generated a buy setup. Now, this was a pullback, even though a rather shallow pullback. It was still a pullback, a pause before the trend resumed. We've all seen what the market has done in the first couple of weeks in October. All right, so let's review before we go to questions and answers. Remember, steps is a way to fine-tune your entry. You can apply it to any strategy. So I don't care if your strategy is based off fundamental news. I don't care if it's based off a ton of indicators, maybe some indicators that you devised. I don't even care if it's based off of the tides of the ocean. It makes no difference, but it will fine-tune your entries. We strongly feel it will increase your odds for consistency. You can also apply it to any market. We've basically focused on stocks, but I showed you some futures and we showed you the Bitcoin. You can apply it to currency pairs. We have traders who use it on commodities. We have traders who use it on bonds. It makes no difference. Wherever there is a trend or wherever there is a pullback, the proprietary tools within Steps listen to it and then decide whether you are generating a fine-tuned point of entry. It can also be applied to any time frame. We showed you 15-minute charts, 5-minute charts of IBM. We showed you daily, weekly charts. We have members who use it on monthly bar charts. You can use it on tick charts. It absolutely makes no difference. Remember, it's only looking for a trend or a pullback. It doesn't care what the strategy is. It doesn't care what the market is. It doesn't care what time frame it is. And lastly, Steps doesn't care what direction you're trading. It will generate buy signals in up markets. It will generate sell signals in down markets. So if you like to trade just one style of either up or down, you can just use that particular setup. Or if you like to trade both up and down markets, you can apply Steps to any direction. Now, we're going to offer you a great discount today, a great offer just for taking time out of your Saturday. I know it's difficult for a lot of people, and I really appreciate taking time out of your Saturday morning to listen to me speak about a great new feature we have here. We're going to offer you Steps, okay? Short-term entry points. This is the 2 proprietary techniques. We give you the continuation entries as well as the pullback entries. Remember, you can apply to your current strategy or build your own strategy based off of this. But we're not going to just stop there. we're going to include our new PTS Primo charting platform. We're really excited about this. I've taken a good year to develop this with ProTrader Strategies, my sister site. And it basically has 40 years of information, 40 years of techniques and strategies and techniques I've accumulated and put it all in one-stop shopping. So it's all right there for you. Now here's the beauty of this. We're going to give you a 30-day trial for only $7, okay? Now, I can almost guarantee you that you spent more than $7 yesterday on coffee, probably, okay? $7 will get you 30 days, and you'll be able to use the platform along with steps. Now, we're not going to stop there. We're going to include the scanner. We realize a lot of you aren't able to be in front of your computer 24/7 during the market hours, and a lot of times you'll come home and want to know what happened or where the setups are. Here's the beauty of the scanner we have. Now, I have to tell you personally, I've always had issues with scanners in the past 4 decades I've been trading. Most of them are so complicated to apply, or you just don't know how to use them, or they have too many variables, they're just too overcomplicated. We've made it simple. Remember, I took the last year to develop this with ProTrader Strategies so that it could be as simple as possible. Let me show you the process of what you could do here once you come home from work on a nightly basis with the new PTS Primo charting platform. You would simply, have a chart, click on the Steps 1 drop-down menu, and you could see where the signal arrows were, and then you would just hit Scanner. That's all you would do. Once you hit Scanner, all right, you're automatically going to see this page come up. This is our strategy scanner. All right, it's an empty blank page. You would simply click on Load Symbols. Now, we provide you with a list of different symbols. So you could have the S&P 500, you can have the top ETFs, you can have currency pairs. It's up to you. In fact, you can even develop your own spreadsheet of symbols that you like to watch. But whatever you choose to look at, in about 30 seconds, it will upload all the symbols in that. I believe this is the NASDAQ 100. All right. Once you have all the symbols uploaded, then the next thing you do is just hit Scan. All right. Once you hit Scan, in about another 30 seconds, you'll see on the far right either green boxes, which tell you those are buy setups for the next day in Steps 1 or Steps 2, or a red bar, as you see here, which is basically telling you those are sell setups for the next day. And then you can decide whether you want to enter. You can look at the chart and decide if you'd like to enter or not. This is how simple it is. So once you do that, here's our PTS charting platform with another feature which is offered on our $7 trial, which is our proprietary buy-sell line. If you see the back of the screen red, it's telling you that that's an overall downtrend to stay out of the market. If you see the back of the screen green, it's telling you that it's an overall uptrend, that it's okay to go along the market. And then once you click on the arrows, they will automatically appear. Now you can have a standard white screen, you can use the background, it's up to you. All these features are your choice. Now this is something that just happened recently. Here was a setup for steps in Oracle. Now remember, you can apply either one or both of these entry points to the same chart. As we see here, if we applied Steps 1, a buy signal would have been given right here, and we see what happened to the stock 3 days later. But if you're more conservative, if you're looking for pullback trades, you could have clicked on Step 2 and your entry would have been right here about a week prior to that, and you could have taken advantage. So we're offering you all this, 30 days to decide for yourself how much steps can help you for only $7. I can almost guarantee you that if you go out to lunch today, you'll spend close to $15 or $20 just for a some type of fast food meal. For $7, we're giving you all this information. We're giving you the steps trial so you can look and see if it really will help you. And then there's no obligation after that. After that, you can decide for yourself whether you want to continue or not. Okay? Included in this, which I did not mention, is you're going to get 30 years of mentoring experience with me as your teacher and guide. So if you have any questions, anything doesn't make sense, or you're not really familiar with how to apply them or where your entry point should be, you will have my personal email address. You'll be able to contact me whenever you'd like to ask me any questions. So you'll be learning from someone who has been applying this to his own trading for the past 4 decades. This is all for $7 only, but it's for a limited time only. If you get this recording and you sit and watch it for the next week or two, and then you finally convince yourself, okay, I think I'll try this steps, well, the price may go back up to close to, I believe it's $97 per month. So you want to take advantage of this $7 deal. Here's all you have to do is contact my sister site, ProTrader Strategies, who I developed steps with. You can email them, you can call them directly, but the best thing to do is just go to that link there you see at the bottom. Now, the link is not live. That's something you'd have to copy and paste there on your screen, but if you go to the chat box on the far right-hand corner, that's a live link that they've posted there, okay, in the chat box. All you have to do is click that on. It will automatically take you to the $7 sign-up page, and you'll be up and running in a matter of moments. Now, here's the one thing. If you have any difficulty or if it's not working, simply call Pro Trader Strategies, 310-598-6677. They can help you set it up, or they can help you if you're having difficulty with the link, and there's no obligation. Remember, if you have any more questions about applying this, there's no obligation at all. All right. I'm going to leave this information up here, and I want to thank you for holding off on any questions. Let me just open up the question and answer box. And let's see here. Please tell me, can I use this in the Indian markets from Sandesh? Well, I'll tell you right off the bat, I don't personally trade Indian markets. In fact, I never have. But having said that, we have a number of customers who use this in the Indian markets. So yes, you can. Remember, it makes no difference what market you're trading. If you want to trade Indian markets, if you want to trade commodities, wherever there is a trend or wherever there is a pullback within a major trend, steps will generate signals, okay, based off its proprietary information. Excuse me. So yes, it makes absolutely no difference, okay? James asks, it depends on time frame. I'm not sure what you mean depends on time frame, because none of this really depends on. What depends on time frame is the time frame you choose. So in other words, I'm not really sure when you mean the time frame. What time frames do we enter? I think I understand your question. So many students of mine, one of the first questions they say is, well, Steve, do I look at the daily time frame and then make sure that the 15-minute or the 10-minute chart is in sync with the daily and then take the daily time frame? All right. Remember, once again, I'm not telling you how or how not to trade, but this is a technique that I learned about 4 decades ago. And in my 40 years of trading, I found no consistency using this. In my opinion, there is absolutely no reason to look at 2 different time frames. There's absolutely no reason. All it served for me is to keep me out of good trades while I'm waiting for the 2 to line up. So I think what your question is, when you're asking on what time frame do you enter on the time frame that you're looking at. If you're looking at a 5-minute chart and a 5-minute signal is generated, that's where you enter. You don't have to wait about it. Remember, as I stated in the beginning, don't overcomplicate your trading. There's no consistency in that method, in my opinion. So why I wouldn't teach something I don't personally use. If I'm trading an hourly bar chart and a signal is generated, that's all I'm looking at. I don't care what the daily is doing or the weekly. It makes absolutely no difference to me. I hope that answers your question. Let's see. Jeff is asking if I was going to show this with PET D. No, this is totally different from the PET D, Jeff. PET D is a trend identifier for the short term. That's a totally different tool, and I'll be talking about that in our weekly webinars during the week. But this is mainly just to get people, just a little bit more knowledgeable on what we offer on a short-term basis for the platform for $7, okay? Just to get them a little friendly with what we do. The PET D is a little bit more advanced, and it's a great technique that I use on a daily basis, but it's more for capturing the trend. It's not generating any buy or sell setups, okay? Let's see. James says, oh, okay, understood. Yes, I think if I answered your question correctly, James. Now remember, once again, having said that, I always tell that to my students in our courses. These are courses we have. The steps is not a full-fledged course. It's just an entry technique. But when we have strategy courses and we have the live classes, I always tell my students, listen, I know one of the main things you're always taught, I was taught this as well, is to look at different time frames. And if I trade a 5-minute chart, the hourly or the the daily bar should be in sync with the 5-minute, and that tells me how to enter onto a smaller time frame. Once again, I don't use that technique. I stopped using that about 40 years ago because I couldn't make any money using it. So I would never teach that. Now, having said that, if you feel strongly that it helps you and works for you, fine, go ahead. I would not tell you to stop using something. It's the same thing with news. I used to, I made markets in over 50 stocks. If there was anyone who you think needed to know about the inner workings of a company or their earnings estimates or who the CEO was of a company would be the specialist who was making markets in that. And that's what I was taught, and that's what I had learned. But guess what? It didn't help me. News would come out that I would think would be great news. It would line up perfectly with my estimations, and the stock would go straight down, or vice versa. Or the support and resistance, which I studied so strongly, and it was supposed to meet with all the investors and all the institutions, and it wouldn't hold. So my mentor said, listen, Steve, there's no consistency in those things. They'll work every once in a while, just the same way if you're at a slot machine, you'll get a jackpot every once in a while. But if you stay over time at that slot machine, you're going to lose money. Same way with these techniques. If you use them over time, you're really not going to have much to show for it. Okay? There's only a very small percentage of people that use these consistently. The majority of us have a very difficult time. So once I stopped using them, that's when I started to be consistent. So I've stopped looking at news now for 4 decades. I don't look at news. That's why we don't have chat rooms or trading rooms, because we don't want people to rely on outside sources. We just want things that are based off what the market is telling you. Because after all, isn't that what we're trading? Isn't that the source? If that's what we're trading, then that's the only thing we should be listening to, right? So I don't give recommendations. Whenever anyone asks me what I think of the market or a stock, I say, well, what is the stock telling us? And that's what we teach you in our courses, and that's what STEPS does, okay? Richie is asking, can you show an example of how to use options day or swing 2-3 day trades? Richie, first of all, I don't personally trade options. We have really good option courses at Pro Trader Strategies, where Eric the Wolfman, he's a great options trader and strategist, teaches those courses. I'm mainly just educating you on how to find setups and how to trade on your own using stocks, futures, or currency pairs. If you want options, contact Pro Trader Strategies. But in terms of actually showing you a signal on day trading right now, I can't really share with you that because this is a PowerPoint presentation. I don't have access to live charts right now. But you know, for $7, trust me, I can't think of a better deal for $7 where you could find that information out for yourself. Remember, my goal is to teach you, is to give you the opportunities and the variables to share so that you can discover for yourself how you want to trade. For $7 right now, you could be looking at whatever you're interested in for a swing trade or whatever, and see if how steps 1 or steps 2 could have helped you. This is what we encourage. We want you to be a part of the process. We're not the type of educational company where we say, just come on a nightly basis and we'll tell you exactly what to buy or what to sell, and we'll tell you what the perfect time frame is. That goes entirely against our philosophy, because no one should ever tell you that. You should make your own decision. This is the only way you will become a consistent trader. If you really feel strongly that that's the way to learn, well, then ask yourself, how is it helping you right now? Why is it that 80% of all traders fail? It's because we're relying on someone or something else to tell us how to trade. What we're trying to do is give you the variables and let you decide. And I can't think of a better deal than for $7 to decide for yourself if this works for you. Now, some people are asking, well, let's say we like it. After the first 30 days, then what does the price go up to? $1,000? No, it goes to a very inexpensive $97 per month, okay? And that's still something that you can decide for yourself. There's no obligation at all. So this is a great deal. You have the mentoring and the education from someone who has been applying this for the past 4 decades. If you want more information, contact Pro Trader Strategies. Or if you're really interested, click on that link in the chat box on the far right-hand corner, and you'll be up and running today, and you'll be able to experiment with steps all you'd like on a new PTS charting platform. I'm really excited about it. As I stated, I spent the last year or so developing this with Pro Trader Strategies, specifically with keeping it as simple as possible. I really have issues with teaching or with platforms that are very difficult. I don't think trading should be difficult. It should be extremely simple. I often tell my students, if you're trading right, if you're trading correctly, it should be extremely boring because it's simple. There's not a lot of variables and different things to do. So I want to keep things as simple as possible because most importantly, I want you to be a consistent trader. So take advantage of this great offer. And I want to thank you once again in closing. Thank you so much for taking time out of your strategy to join us. I wish you the best of luck in trading, and most especially, I look forward and hope that you become a student of mine in our new Steps course. Thank you so much for attending today. I will see you next time. Bye-bye.